Well, I happen to own both of them, you know. Here's a little silver right here, just in case. But also, here's a little gold in case. What I said was that on a historic basis, silver is down 40 or 50, 40% or so from its all-time high. Gold is making all-time highs. So that says to me that silver is cheaper on a historic basis. And if I were buying one today, I would buy silver. But I own both. I'm not selling either. I expect to buy more. Who knows when? Because I do know, Danny, that when things go really wrong, we always, all of us peasants, want some gold in the closet. We want some silver under the bed.
JimRogers is an American investor, renowned for his insights into market forces and economic crises. In his analysis, JimRogers states that silver, down about 40% from its all-time high, is undervalued compared to gold, making it a more attractive buy. Rogers discusses the cyclical nature of global powers, such as the US dollar replacing the pound sterling when England's dominance waned. Metals marked a generally positive second quarter, analysts at Deutsche Bank said in a last Monday note. Historically, silver prices have shown considerable volatility. Comparing current prices to historical averages and peak prices can provide some insight. As of mid-2024, silver prices have risen substantially, but remain below their all-time highs observed in the early 2010s. Despite acknowledging the pressures on the US dollar, Rogers sees no immediate replacement. He expects the dollar to surge during significant turmoil as a temporary safe haven, but plans to sell before its decline. Concurrently, Rogers highlights the limitations of relying solely on precious metals for everyday transactions. The effects of inflation are the key to the gold price. Precisely, the ongoing higher price for gold reflects the actual loss of purchasing power in the US dollar that has already occurred due to the inflation created by the Federal Reserve. In early 2024, gold has ignored rising rates and a strong dollar as the price has rallied to new record highs at over $2,400 per ounce. The gold bull market that began in 1999 at $252.50 per ounce remains firmly intact, with no sign of correction on the horizon. He further states that people historically turn to gold and silver as safe havens in times of turmoil. Meanwhile, he notes that even the Chinese yuan is not a potential candidate for replacing the US dollar. Now we present the clips of JimRogers' insights from his recent interview with Capital Cosm. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
Well, if you look back in the past, go back to England, for instance. I mean, when England was the number one power, that changed. And when it changed, a new power rose, the US. I mean, we became the replacement of the UK. The US dollar became the replacement of the pound sterling. There's always somebody rising and somebody declining, and that's happened throughout history. It's going to happen again. I don't know who the new power will be. Well, let's put it this way. I don't know what the new currency will be. I know the US dollar has pressure and problems, but I don't see a currency to replace it. Theoretically, it would be the Chinese currency, but the Chinese currency is not even convertible. So you can't have an international currency that's not convertible. They are changing that, but very slowly. So as I look around the world right now, Danny, I don't quite see where to go, either with my currency or my investments. Yes, I own gold. Yes, I own silver, but I don't have 100% of my money in silver, I assure you. And I don't have 100% of my money in anything. I do have a lot of US dollars right now, because historically, when there's a problem, people they look for a safe haven. For historic reasons, most people think the US dollar is a safe haven. So I own a lot of dollars. I expect that when the big turmoil comes, the dollar will go up a lot because everybody will be seeking safety. But that will be the last move as far as I can see. I hope, if it happens, I hope I'm smart enough to sell my dollars. But Danny, I don't know where to go. I hope maybe you can give me an answer. I don't know. Everybody has to put their money somewhere. But even if we tried to put all of our money in silver, then what do you do? I mean, you can't go down to the grocery store and say, I need a loaf of bread. Here, I've got a bar of silver. Probably even got silver coins. Can't live your life that in the world as we know it. You cannot live your life that way yet. I do know that when emergencies come and when there's turmoil, people look for something. And historically, humans have always used gold as a safe haven or silver. And we probably will try again, at least for a while. I mean, gold and silver do have problems, but we got to use something. And I don't see anything else on the horizon yet. I don't see an alternative currency yet. I'm looking. That's one of the reasons I'm talking to you. I need an answer. So you have to come up with the answer for all of us, or somebody does. And human beings always change. They have to change when there's a panic or an emergency. But I don't know what it will be yet. I assure you I'm looking.
JimRogers mentions growing global distrust in the U.S. dollar, driven by Washington's sanctions and the U.S.'s status as the largest debtor nation. Consequently, he anticipates this trend will escalate during the next U.S. recession. Moreover, Rogers notes that this trend is causing widespread concern among countries, prompting them to seek alternatives. If the U.S. entered a steep recession or depression without dragging the rest of the world with it, users might leave the dollar. Another option would involve some major powers, such as China, reinstating a commodity-based standard and monopolizing the reserve currency space. However, even in these worst-case scenarios, it is not clear whether the dollar would collapse. While reflecting on historical financial crises, Rogers warns that the most concerning moments occur when market forces overpower government control. This shift can lead to skyrocketing interest rates, currency collapses, and governments imposing strict controls to manage economic turmoil. Let's get back to the interview.
Washington keeps accelerating it. If Washington doesn't like you, they cut you off. They say, okay, you cannot use the dollar anymore. Well, everybody notices that. Even our friends are starting to say, wait a minute, they could do that to us too, because they've done it to many people. And so not just you who understands the world and me who can read the newspapers, many countries, including our friends, are starting to look for an alternative to the US dollar, accelerated by the fact that we're the largest debtor nation in world history. So for political and economic reasons, people are beginning to move away or look for something else. And you ask when it's going to happen? I don't know. Why don't you watch Danny's show? He'll tell you when. And I know it's getting closer. And I would suspect that in the next recession, which the next recession which the U.S. is involved, it will accelerate because the debts are so staggeringly high. We will start to having problems with companies and industries, U.S. companies, and that will make more and more people scared. So I would suspect in the next recession or two, it's going to be horrendous. So I say it's a good time to be old. When the U.S. starts cutting people off, and so everybody says, oops, wait a minute, that could happen to us. And I mean, BRICS actually theoretically started sooner than that, but that's not very important. Whether it's BRICS or whatever you want to call it, the whole world is starting to say, uh-oh, what will we do? Because if they cut us off, what do we do? And the US dollar is the world's international currency right now. And so if you start cutting people off, they're in a bind, and nobody wants to be in that bind. And the whole world sees what Washington, first of all, they see our problem of being the largest debtor nation in history getting worse every week. And then they see Washington cutting people off, including our friends. So everybody has to worry. Well, if you look back in history, the worst part is when the market forces a breaking point. As long as the capital, the government is in charge or trying to be in charge, at least there's hope. But when the market takes over, when the market says to the government, we don't care what you say, we know what's going on, and the market takes over, then you see interest rates get out of control or currency collapse. I mean, whenever the market realizes, oh my gosh, these people are in trouble, when the market does that, it's not fun. Stocks go down, interest rates go higher, inflation goes through the roof, the currency collapses. Unfortunately, in many cases, countries put on exchange controls, try to limit you. You know, they say, okay, if you want to go to London, you can take $50. That's all you can take. You know, they do everything to control you. They don't care about you. They care about trying to save themselves. And it gets really, really bad.
Nearly 60% of these countries' central banks believe gold's share of global reserves will rise over the next 5 years, while 56% think the US dollar's share will fall. Based on trading economics macro models and analysts' expectations, the price of precious metals will range between $29.88 and $32.05 in the next 6 to 12 months. How do you think global shifts away from the US dollar might impact your investment strategies and the stability of global markets? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.